a huge lie. Listen to this.
We got great economic news and low inflation reports this week, and that is what turned the markets around.
That's not true. We don't have a great economy. My God, if we had a great economy, would we have deficits where they've increased by 340%? Would we have where every 100 days they're spending $1 million? Every 10 days the deficit's going up by $500 billion? Is that a great economy? No. Here's what happened. Let's take a look. This is the S&P. My members shorted with me the stock market, the S&P. We did terrific. And then when we had that rally, we switched over to this chart, is my Pro 1, which identifies money coming in at a short period of time. It was pretty good. So that's why we switched to ETFs. We bought the semiconductors, we bought the big tech stocks, we bought the small mid-cap ETF, and we did terrific. Now, this indicates a trend I drew in. This was a high. They came back, they rallied, it failed to get back to the high. Then we had the drop. I indicated we have a high probability, if this trend line holds, for it to stop here. And again, it's a probability, nothing sure in the market. So when they were doing those stock buybacks, it went beyond that, but it never turned green. This continues, you can see this, to tell us there's still not enough money going in. In other words, there's still a question if this is sustainable. Now, I believe that we can go probably another week or two, depending on are they going to continue with these big stock buybacks. And Wall Street, you know that Wall Street historically is always backed the Democrat Party. And it just happens to be that this week the DNC is having their big party, we'll call it. So I believe this is going to happen. Here's what we have to do. We need to continue to follow the money because the economy is terrible. We know that. And problem is to say that it's the fault of large corporations because they're gouging. That's ridiculous. The economy has nothing to do with corporations gouging. It has to do with the government increase in money supply. In other words, the more they spend, the more debt we get into. That's the problem. That's what's going on. That's why the economy's hurting. So I believe that we can see probably for the next week or two another increase, but we got to be prepared if it's going to turn around again and pull back. Because we could pull back as far as 17% could be our next pullback, okay, to here, or we could go all the way back to 30%, which it would be right in this area right here. But for now, this is our base. This is what we have to wait and see if they're going to come down and break that, or if they continue to break out, especially on my chart, if it turns green, and that means they got enough money coming in to keep it sustainable. Then we'll continue with our swing trade over here. But until it turns green, we're not comfortable with that. But we'll stay with our ETFs on a short period of time. So again, the market, there's no right, there's no wrong. It's always about probability, and it's always about to catch that highest probability is follow the money. Now we'll show you that. And we've been teaching this at Phil's Gang 25 years. And I've been doing this for 50 years. And you got to learn how to sell short. Because when things turn on you, you want to take advantage of shorting. And we'll teach you how to go long, teach you how to do both, how to read a chart, how to do it properly, how to follow the money instead of the BS. So just please hit subscribe and like. Go to philsgang.com. You can join for 10 days free. Doesn't cost you anything. And again, there's no right or wrong. All about probability. And that's why you got to learn to follow the money. Also, not just buy, but how to short. Give us a chance to do that. I'll see you on the charts.